Well, you always got to zoom out, guys, because what's happening right now, what's unfolding before our eyes, is it's a huge paradigm shift in from U.S. equities being where they are today, and a transition back into gold, silver, commodities. And you got to get some tools out, some momentum tools, some rate of change tools, and on the monthly chart and zoom out to see exactly if you're going into an asset that's cheap, like historically speaking, or it's an expensive mode. So um, I could show you a few charts there that I queued up that I think are quite compelling there to tell this story.
Okay, so what are we looking at right now? On the bottom chart, there's an arc. You drew this yellowish arc, and we're
Right here.
currently at the bottom end of that arc. So are you implying then, Patrick, that if this chart pattern were to follow the arc formation, we would be trading at much higher prices into next year?
Exactly. So right now, this is the historical gold chart. So you've seen this, the rate of change. So 7 year rate of change. It means wherever you are in this chart, if you would have bought 7 years ago, that's how much change, how much it went up. So 600%, 900. You see here's the bubble in the 1980s. 2011, we had a rate of change of about 350%. And technical analysis, it works on any type of instruments, human emotion. So here's exuberance going up, and after that, here's I could have drawn even here a perfectly broken trend line, just broke down, and then just down, money flowing out of gold, etc. Starting to find a bottom. So the rate of change here was actually negative. But right now, what's happening is very bullish. So we went from negative rate of change to bullish. So we went from below zero to above zero, and we're gaining momentum. And right now, we're coiling, slowing down on this breakout line right here, trapped above an inclining arc, so higher lows, right? The arc always helps you support the price action. And man, this is a setup. The last time we've seen this, it was like in 2003, right here, when we started crossing above the zero line, above historical resistance, right here where I put these black markers. And we're right above it, actually. We broke out and we're just retesting it. So if that arc holds, the momentum of the price action, the rate of change for gold should keep appreciating until it's unsustainable anymore and falls over. But you see here, I have if we do a reverse symmetry move in 2024, gold should be like over 250% above what it would be in 2017.
Okay, why did you use 7 years as your cycle?
Man, it's I interviewed the Blackbeard research report a while back, and he was using 7 year rate of change, and he said that I forget who. Well, I'm so sorry. We'll try to find the name, but
Hmm.
it's this important cycles there that some other guys have been looking at. And I said, okay, I'll try it. See if it makes any sense. But as a TA guy, I don't put any importance to it, but it kind of fit. So I just kept going using that as a baseline.
Okay, all right. Now, can you apply any fundamentals as to why gold would trade at 250% higher than the previous 7 year level?
Matt, unless I have a chart of a fundamental, so unless I have a chart of the inflation or the DXY, which we're going to cover later, I
Yeah.
can't. All these fundamentals for me, their narratives are dangerous even for your trading portfolio because
Okay.
I've noticed in the past that, oh man, I think this stock's going up for this reason, and then even if the price action went in my favor, it would like, oh yeah, I'm right, I'm right. But years later, I realized there was something else moving the price, right? So
Okay.
I try to stay away from any type of oh, it's manipulation, it's this, it's that.
Yes,
Uh,
I understand.
yeah, I really try to stay away from that there. But if it's something I could chart and make
Yeah.
correlations with, like money supply, ratio charts, that's fine.
Patrick, I have a question about your arc. Let's say we take that yellow highlighted area, the arc, and move it over to 1987. So if we align that arc to exactly, yes, what happened from 1983 to 1987, that kind of looks like the left-hand side of an arc, right?
Yes.
And then if you look at the second arrow that you got pointing down, it looks like it was ticking up, which is kind of where we are today. But instead of going back up to 200%, it kind of just stayed flat for
Right.
15 years. What's the difference between this time and that time?
Man, this is like the golden egg question to be not paralyzed by analysis, right? Because you could always find something in the past. Oh, why
Yeah.
did it? But it's the weight of evidence. It's the gold to SPX ratio. It's the Fed fund rates going down. It's the DXY strength. And you've noticed, look, this black line, this was resistance right here. I've noticed that here was support. So previous, I call that a wall. Previous support, if you break down below it, when you try to go back above it, it's resistance. And each of these times, we were not able to go back above this line. So it's in the weight of evidence. There's an arc that defining the left hemisphere, fine. But until you could break out of a base, you have to add that evidence, right? That those other
Okay.
technical analysis tools that add
Yes.
probabilities of that possible move going up. And we never did. We never did. And if you would have respected this line, as long as you didn't close above, you didn't have the signal to go long until like 2004 or 5. We broke out above, retest, then you knew it was go time. Just like we're doing it here, we're attacking it from above now.
What
That's
is
a
a
big difference.
reverse? What is a reverse symmetry move? Can you explain that?
Yeah, reverse symmetry move. It's a psychology of all these sellers just selling super fast. So here, there's not a lot of buyers, right? On the way down, it's going down so fast, and all the people that all the bag holders about higher up here. That's why you need a long time in the base for these people to get out. The tax loss seasons, whatever, they're all out. And once they're not there anymore, once there's an alignment for price to start doing higher lows, well, there's nobody here that wants to break even. Oh, honey, like they didn't want to tell their wife that they lost all the money. Like they sold years ago. So when you go up, there's like a vacuum, and you see these all the time. So the faster it goes down after strong base, when you go up, it goes up pretty much the same speed that it went down.
Yeah, you don't want to tell your wife you lost all your money. I'm not married, but I can understand. All right, so let's talk about let's talk about what that arc implies for the price. So what's interesting about that arc is that if the chart pattern were to follow the arc, as it did for the first half, not only can you guess or estimate the price level it will be trading at, but also the timing of this climb, right? So you're looking at 250 times or 250% of the 2017 low. So what is that in dollar terms?
I think that's close to 4,000, David.
Yeah, 4,000. Yeah, 4,000, 4,200. So that would be around what year would that happen?
Q3, Q2, 2024.
Okay, interesting. Let's switch over to silver now,
Yeah.
and let's apply the same analysis to silver. So what are we looking at there?
Well, same thing here. So right here, this is probably an area where we're gonna have a congestion area where it could slow down. So in August of 2023. So for this one, in between 2023 and maybe like it could hit at any moment here, a little bit before, a little bit after. But let's say about that region from 2023 onwards, I have about a 350% rate of change, 7-year rate of change. So let's make it a 2024 minus 7 years. So in 2017, multiply the price of that for a 350% move. And I think pretty much silver in 2017 was in the teens.
Why don't we talk about why you think silver and gold will trade in unison, in tandem over the next few years? It has been trading together in the past, but more recently it's sort of diverged. Do you think they'll continue to trade together going into 2024?
Yeah. Look, gold and silver, they've traded pretty much together. But when you have both of them exploding off these 7 years rate of change of these bottoms there, these shift where the money flows are going to start entering into gold and silver. We know that silver is going to start outperforming gold, right? We see with the gold silver ratio that's topped at 120 in March Madness and crashed down, came back up today, and now it's starting to turn over. So they're both gold led the way, already above all time highs.
Yeah.
And the silver right now is just tracking like it always does in a precious metals bull era. It will track gold and surpass it.
Okay. Now let's take a look at silver. So you're saying that are you using 600% growth?
So they're both gold led the way, already above all time highs.
Yeah.
And the silver right now is just tracking like it always does in a precious metals bull era. It will track gold and surpass it.
Okay. Now let's take a look at silver. So you're saying that are you using 600% growth?
350.
350. Okay.
Yeah. So I've done other charts where I know that there's a descending trend line above here. This is probably a congestion area. These blow off tops, try to discount them. So from Q4, Q3 2023 onwards, so maybe 2024, the same time as gold, around that region, silver should have a rate of change of about 350%. So if a 7-year rate of change, so 2024, 2017,
17.
gold was about $16. So triple or quadruple $17, and that should be your target price for that region.
So in 2017, it was around $17. Okay, if we multiply that by 350%, that's 4.5 times. Okay, so 17 times 4.5 is 76.5. So you're looking at $77 for your silver target, which is, look, it's under the $100 silver price call that I've heard some people say, so not completely unreasonable to believe that it could go to $77,000 or $77 rather in a few years. And that's by 2024, you said?
Yeah. And that gives you a gold to silver ratio of 57. And you're still within the specs. Like I've done some charts where the gold silver ratio, there's a support line around the 40 level. So they're both going up together and respecting the gold silver ratio. So in your total weight of evidence, these are attainable numbers, right? When you see the big picture, when you see this arc turning around, and as long as it's able to support that momentum going upwards, that's the rate of change you should be expecting there.
What does your technical analysis tell us about gold and silver in the short term?
All right. Well, okay, I'll show you a couple of charts. So I know I've said you need 28 to close above a weekly close above 28 to really start looking at those $70 targets or those higher up targets. But you could always use, here's an 8-hour time frame chart for silver, and you could always start looking at the smaller time frames. When they start turning around, the 8-hour time frame, if it breaks out, then eventually maybe the daily is going to break out. And if the daily breaks out, then the weekly. So you're trying to kind of see where the bottom action could carve out. And this chart was done in September of 29. And using the arc, I had one touch here, another one here. I had a bullish, expanding, descending wedge, which kind of looks bearish, but actually that's bullish, where the price action goes lower and lower, but that's just exhaustion selling. And after that, you could start drawing trend lines where it could break out. And I did this one after I published it on TradingView. So on TradingView, you have a fast forward button right here. I'll do it for you guys. And when you fast forward, it shows you all your chart annotations the way you did them, but it shows from that point on what happened to the price action. And right here, this was a good bullish omen when we broke out of this descending trend line. Here, a bullish transition zone. And here I have a longer term trend line, which brings us all the way to those 28, that nasty $28 we want to get up above. And we went up to it, played around it, and it went up, retested it. I could have probably drawn this line better. There's some folks told me that we actually did a retest, and now silver is moving up level by level within the confines of the arc. So this is very bullish as long as we keep closing above these levels identified here, $25, closing above, one step at a time, and then retesting it, moving slowly to the right hemisphere of the arc. We should be heading close to retest those $27, $28 levels there by the end of the year.
Okay. I'm just curious as to why you're applying arcs to the short term as well. Do the arc formations also apply for shorter time horizons?
Exactly. If the thing with arcs, and we use them at Northstar Badcharts, and Kevin, you've had the Kevin Northstar charts. The high success rate of a chart is just because it encapsulates so well a descending trend, right? Where nobody wants anymore. Here, there's super, people are calling here the gold chart on the daily chart. People are calling golds going back to 1200, deflation. But as the momentum slows down, the bottom, you see it starts flattening out. And as soon as you start hitting the right hemisphere and you start having higher lows, you have to listen to the price action telling you that, oh, something is happening. The momentum is not going as down as fast as you want it. You're actually starting to build upwards momentum. So here's the daily chart. I have a bigger encapsulating arc, and within it, I had even a smaller time frame arc. Where the smaller the time frames, you have to be careful with them because they could be their momentum could be overridden by higher time frame resistance lines, right? So at any moment, they help bring the price upwards, but they can falter